Hey, Michael, Derek. I think everyone's just coming in now.
Hello.
Can you hear me loud and clear?
Yeah, it's great.
Wonderful. Derek, you there as well?
I'm here. Hey guys.
Ex- Excellent. Um, anyway, this is recorded, so let's jump right into it. And thank you very much for joining us. Welcome to our fourth episode of the SubQuery sessions. This is a kind of a monthly episode where we kind of go into something deep, deep topics. And today we're very lucky to be joined by Michael Arrington from Arrington Ventures, and Derek Yu from Moonbeam. Thank you very much, guys, for joining me. And do you want to give us a quick introduction about yourselves, the background, projects you come from? It'd be great to hear.
Go ahead, Derek.
Yeah, sure thing. So I'm Derek Yu. I'm the CEO of the company Pure Stake, but really the project we work on is Moonbeam that everyone knows. And the quick summary of Moonbeam is that we are a layer one smart contract platform that is really kind of specialized and optimized for cross-chain scenarios and supporting different kinds of cross-chain use cases.
My name is Mike Arrington, and our fund is Arrington Capital. We've been a crypto-focused hedge fund since 2018. I think we've done I don't know, between 100 and 200 investments in crypto projects since we were founded. Moonbeam and SubQuery are two of those projects, and two of the ones that we're most excited about. Before that, I was a venture capitalist. Before that, I was an entrepreneur my entire career. I had a website called TechCrunch where I wrote about startups, and that was a lot of fun. I did that for 5 years. So that's me.
Yeah, thanks, Dan. I'm really looking forward to this. Both of you two have been in the space for many years. Michael, you've been in technology and so have you, Derek, for longer than I was probably alive. So it's going to be really good to
How
hear.
old are you?
Oh, too young, but feeling old every day.
I first entered technology in 1995. That was when I got out of law school, and I was a lawyer for startups. And at that time, that was kind of when the internet launched, and so I was just doing all kinds of work for all the internet startups back then. Amazon, we took public. Netscape, we were their main lawyers. We did some work with Apple. We actually did the deal where Steve Jobs came back to Apple. That's ancient history now, but it was very exciting at the time. It's a little bit sad for me to realize how old I am at this point. I remember when I just started out, the guys that had been around since the Silicon Revolution and like the first chip makers just seemed so ancient to me. And so I quite understand that I now seem pretty damn ancient to everybody. The way I deal with that is I just hire young people who really know everything about crypto. And but yeah, it is weird getting old. It happens
Michael,
fast.
I'm not even sure that people know what Netscape is. Like, you know what I mean? I'll date myself too because I'm about the same vintage as you are.
Netscape
So,
is when like I was in my law firm and people were just starting to get on the internet. I mean, I'd done like AOL dial up at that point, but I was like, how do you get on the internet? And they're like, well, go into the library. It's the only place with the internet connection and pull up Netscape. It was the browser. It's what Chrome is today and Firefox. And that was it. And it was it. That was the only browser. And it was Mark Andreessen's startup. He was a young kid right out of college at the time, too. And it was a really, really, really big deal. And then Microsoft just ate its lunch. So very sad.
Yeah, it was a shame what
kind of
Explorer
memory.
did.
I
But
have a similar memory where,
Andreessen
like,
is, obviously in.
oh, sorry, I was going to just comment on that. That I have a similar memory where, back in that same time, I think I was a sophomore in college. I was first exposed to like Netscape Navigator, like 1.0, or it might have even been the NCSA Mosaic product on a Sun Solaris workstation, like in our computer lab there. And it's one of those moments where you see something and
Yeah.
you realize that like that's gonna change like everything. And there were so few people that kind of
Yes.
understood that at the time, right? I
It
remember it was
changed
like,
everything. And the first time I did a crypto transaction, like a proper one, not just buying on Coinbase or whatever, like properly like used a key and transferred some Bitcoin, it was the same thing. It was exactly the same feeling. Like, oh
yeah.
wow, this changes everything. This is a bearer, like a bearer, like a bearer bond, and like I'm actually moving money, and there is no middleman. Anyway, just blew my mind.
But I agree with you. There is some similar feeling, like that feeling from those early days of the internet, and then
I
when I
know.
started learning about crypto, there's definitely like some similar feeling of like I'm not smart enough to figure out all the ways in which this is going to like impact the world, but I know it's going to be big, right? And so that's something
I wish I was
exciting and
25
motivational.
now. I wish I was 25 now because it's going to be a really exciting few decades. So yeah. But we're not on here today to talk about old times with old people, are we?
I'm happy to talk about that thing for hours. I reckon that would be an interesting topic to talk about. And let's dive into that quickly before we start with the Ecosystem Growth Fund. Arrington, you guys have been around since 2018. You were Arrington Capital. You were one of the first venture funds to be denominated in a crypto asset rather than in a dollar amount or a fiat amount. And you have kind of observed, obviously, the last bull cycle in 2018, the subsequent bear market that survived for a long time. And this is where you kind of come into it, Derek. I believe Moonbeam kind of began in that bear market. How have you guys seen the last 3 or 4 years go by, and how does that knowledge of or experience that you lived in shape how you look at the next couple of years as we kind of enter into another bear market?
I can jump in on that one at least with some thoughts. For me, like, and I think Michael will have a different perspective, but for me, since we started in that bear, as you say, I think this last cycle is the first like full cycle that I've been through, myself and the rest of the team. So, there's just learnings like from just experiencing that. It's a lot of there's a lot of emotions. There's a lot of like things that are happening. So I think that. It's obviously something that I think everyone in crypto has to experience and kind of take away from it, like all the different lessons and different like ways of thinking that you need to have to be kind of long term in the space. But yeah, I think for us, just trying to have this like long term view, trying to think out at least some 3, 4, 5 years, like that's kind of the key. And it's just there's just a lot of distractions, but you have to kind of stay focused on those like longer term trends. Like building products like isn't like super quick in the space. It takes a lot of time. You have to be very careful from a security perspective. So I think that's kind of the my impression is that I think I'll be better prepared for the next one. I guess having gone through full cycle at this point.
Yeah, I same. I mean, this topic is talked to death, but it's like that meme from the guy being hung or hanged. Is it hung or hanged? Anyway, and he says first time. I forgot what it was, an HBO show or something, but like you go through these things, they're never the same twice in a row. But it's amazing how you adapt to the extreme volatility and risk, and it takes a lot to shake you. And you feel for the new people, because the new people come in and they're so enthusiastic and they're part of a group, and then what always happens to them, and then they rebuild and they're stronger next time.
So, Michael, you've been, Arrington obviously started as XRP, but you're now quite big in the Algorand, the Polkadot, and also now the Moonbeam ecosystems. What is this common thread among those three different ecosystems, those three kind of steps in your journey?
Yeah. Well,
and
so our initial.
why?
Go ahead.
Go ahead.
And why? No, end the question. What was the last part?
And just what has kind of linked them together, and why have you kind of gone through those three areas?
Okay. One of the reasons why TechCrunch worked was I was absolutely in favor of entrepreneurs. I didn't even I was a journalist all of a sudden. Like, I didn't know what a journalist was. I just knew I wanted to write about startups, and so I wrote about startups. And then as we got very popular, real journalists like started yelling at me because I was so biased, and I was always on the side of the founders, and I just didn't care about much else. I mean, it just didn't. And so I can't help that's who I am. My heroes in life are founders. It's not movie stars. It's founders, and founders who succeed, and founders who fail, and founders who go in between. I was a founder. I kept failing, and I finally succeeded with TechCrunch. It was the first company I started that wasn't a company. It was supposed to just be a blog and sort of something to do in between companies. But I knew if I kept trying, eventually there's a good chance it would work. And so I understand the journey. I understand the pain. I understand the ups and downs. I understand how much you have to give up in your personal life to really be a founder. It's not just a short term, it's a part-time job. It really is all encompassing. People sacrifice families for part of their life. They put off families, they put off everything, showering, eating, everything. And so I love the founders, and that is relevant to your question, because when we started with XRP. We're very close to the founding team of Ripple. They were very kind enough to give us our initial capital, not directly, but through charitable foundations. I mean, the founders of Ripple, particularly Chris Larson, have been incredible um, in the way they give back to the community. And the amount of money they have put into charity is literally staggering. And so some of those charities they started need to have people managing their money, and we're part of that ecosystem. But because we were given XRP, they didn't really want us necessarily investing in XRP. They wanted us investing in other things, so that, because they still held a lot of XRP, and there is, it still today isn't much of an XRP ecosystem because it's not like ETH. So we started investing in all kinds of stuff, and we still held and still hold XRP. But the idea was to diversify from there, and because of that, we met all these amazing founders. Algorand was one of the first, and we fell in love with Algorand from a tech standpoint. They have never been the best marketers, hypers, etc., which we actually like. I think eventually that will help them. But we'd invested in Algorand early on. We invested again. We got to know the team really well. Kelly Callahan, who was their CMO, is on this Spaces right now. She's now a partner with our fund. Like, we poached from them. We got very, very close, and so we started a fund with them last year, and just dedicated to investing in the startups that we're founding on the platform on the Algorand platform, and it's worked out really well. We've made a bunch of really cool Algorand investments. I think those companies would have existed without us. We're very lucky to be part of their journey, but we're just trying to do everything we can to help them. And then the same thing with Moonbeam. Moonbeam was like a year later than Algorand was our initial investment. That was, Derek, when did we first invest in Moonbeam? I always get the year wrong, but it was 2020 or 19?
Yep. No, I think
Yeah,
it was
2020.
early 2020, I think.
Yeah, so it was like
in 2020.
yeah. So in your first round, yeah. So it was like a year after Algorand, and so in our fund with Moonbeam is almost a year after Algorand as well. But it's the same thing. Like, we invest in these people. They perform beyond all imagination, and not just monetarily, but just the tech they build, the seriousness with which they approach the tech. And we get very close to them, and then we want to, if their platforms like Algorand and Moonbeam are very different platforms, but we want to help the next set of companies build on those platforms. And so it was natural for us to approach Moonbeam and say, hey, we think there should be an ecosystem fund. We'd like to run it with you. We invested in the very first 2 rounds of Moonbeam. We have lots of Glimmer. We'd love to put our Glimmer in as well. And so we formed a partnership, and we've made, I don't know, 3 or 4 or more early investments in the Moonbeam ecosystem as well. There's also companies like SubQuery who are deploying on Moonbeam. I think everybody knows that. I hope I didn't just break any news, but it's not technically a Moonbeam deal. It's not through our Moonbeam fund, but there's, we just like seeing the companies, cross-pollinate in that way.
Yeah, well, exactly. We're a tooling that allows people to build on Moonbeam faster and more easily, and that's really the aim here. But that's a great tangent to talking about this Moonbeam $100 million ecosystem growth fund that you've set up with Moonbeam. And Derek, do you want to introduce that, walk us through what that is and what the aims of that is?
Sure, and I'm sure Michael has like a point of view on this as well. But from my perspective, just to kind of reinforce a lot of the points that Michael made. You kind of start a project, you find folks that believe in you and want to support the project. And by the way, I will tell you that it was mentioned that this was the kind of the bear before the bull run. I kind of surprise people when I say that, like, it wasn't that easy to like raise funds, like, back then, right? So, I had spoken with like, a lot of people. I've been on like a whole kind of tour, like, around to like find the right investors to work with. And really from early on, Michael and the rest of the team, were very kind of supportive, engaged, helpful, and making further introductions. So sometimes that's what it takes, is you just start having interactions with someone, and things
Derek, I
are
thought you
kind
were
of working.
going to go in a different direction. I thought you were going to say like the top 20 people you wanted as investors all said no. And so you're like, fuck, we better just take Arrington then. Like we need money from somebody. So
No, no, no. But yeah, I mean, I think I think when I talk to founders sometimes, not to digress too far, it's like sometimes they're a little bit discouraged or what have you, and you realize that they say, well, it was so easy for you. It's like, well, no, it wasn't. It's like it's not easy to start a project, to go raise funds, to find the right people to work with. I mean, these are not easy things. But yeah, I mean, back to the kind of this story. This is just how it works, right? I mean, you start building a relationship, interacting with folks, and I think it starts to become clear who's kind of really believes in you, who really is kind of genuine, and is engaged, and is trying to be helpful. And so yeah, I think that's that this relationship with Michael and the team has been growing over some longer amount of time now, right? And so that made it, and you mentioned kind of both our the seed round that was done, as well as the following strategic round. And through that time, when we kind of have different stages of the life cycle of project. We were in kind of build mode. We built for quite some time until we had the launch of Moonbeam earlier in this year in January. And when you're kind of building, that's one thing. You're kind of focused on mostly the tech, and also maybe some of the initial ecosystem development. But once you launch, the needs kind of the challenges shift a bit, right? So once the network is launched, it's really of course they're still building, and there's still tech development, and forward kind of progress in these areas. But really as the ecosystem kind of is getting bootstrapped here on Moonbeam, what we realized is that we really need the right partners to help support the growth of the ecosystem. I mean, there's there's too many teams for someone like PureStake to be able to interact with all of these teams, and help them, and support them. So I think it became clear that this a fund like this would really be a great catalyst to help support the growth of the Moonbeam ecosystem. And so yeah, I think that there was kind of obvious then who to talk to, right? Are the people that have been around, right, and have been supportive throughout. Those are the first calls to take or make.
That's a really good point, Derek. And for those that have just joined us, you're listening to SubQuery Sessions. My name is James Bailey. I'm Head of Business Development, and I'm very lucky to be joined by Derek and Michael from Moonbeam and Arrington Capital, respectively. But Derek, I want to dive into that point. Growing an ecosystem is hard, and Moonbeam is now at that point of size and of volume and of the number of people building in it, that you're essentially a layer one network that can stand on its own right, and you have this huge ecosystem. And you're transitioning from the situation where Moonbeam has been reaching out to all these teams and helping them get started, and providing a lot of help, but now you should transition to something different, more hands off. What does that look like over the next 2 years? How are you going to continue the success while doubling or tripling the number of teams building within the Moonbeam ecosystem?
Yeah, I think it is, as you say, that this network is larger than any one company or team. And some of the things that I see that are quite encouraging are interactions between the different participants in the ecosystem. I see a lot of partnerships, a lot of people supporting each other, integrating with each other, and a lot of initiatives that are happening that are community driven. So for example, there's this this Moonbeam penthouse effort, right? And there's a team that put together this downtown Moonbeam site to just even catalog hey, here are all the projects that are deployed on Moonbeam. Here's a place for builders to basically connect with each other. And these things have quite a bit of traction, right? So I think that to me is the is a great sign where these kind of these connections and these kind of interactions are happening somewhat spontaneously and kind of a bottom up and organic way. I would say that's something. If I were to characterize the Moonbeam ecosystem, we may not, unlike some other networks where it's kind of more like big like top down kind of effort. I mean, our ecosystem is definitely much more grassroots, organic, and kind of growing together. And I think that's that's kind of our strength in a way. I think because a lot of builders like that, right, and want to be in an environment like that. So yeah, I think we need to just hope for more of that to happen as the whole ecosystem grows. And I am quite bullish on the ecosystem growth because really the market is coming around to a lot of these ideas about cross-chain connectivity and its importance, and that there's certain key, let's call them like almost trade routes or different different connectivity paths and different transports that are gaining traction. And so I think this was something that we thought about even when we started the project, that there's certain kind of key junctures, right? There's certain kind of confluences of different rivers, if you will, right? That that are kind of structural, like in the market. And so I think Moonbeam is quite well positioned, being kind of this, let's call it almost a hub within the Polkadot ecosystem. We're already seeing that play out where a lot of the dApps on Moonbeam are kind of some of the main venues for Polkadot ecosystem assets, but then also connecting like from that ecosystem to the outside world and being, let's call it like a hub of different cross-chain communications. I think that this is a pretty strategic position or spot, like within this landscape as it starts to get more and more connected.
So would you kind of say, in summary, it's kind of like building all the tools and the foundational infrastructure that everyone needs to succeed, and then just stepping back and letting things develop organically from there?
Yeah, and on this tool side, I mean that's obviously something that we have spent like a lot of time on. So that's, and to kind of draw it back to the beginning of the discussion, myself and the rest of the team had this experience building in the regular Web 2 space, right? And so some of the things that sound quite obvious, but I think that we were that we've done a pretty good job on is basically just being focused on who is kind of the main customer or user. In our case, that's development teams, right? Protocol development teams, and then like listening very carefully to them, right? To talking to them, was interviewing them. But initially, we spent a lot of time with teams, just asking them, okay, well, what is it that you need? Like, what are the tools you expect? Like, what do you need to be productive? And that shaped a lot of the direction of the features that then were implemented in Moonbeam. That's what for example, drove this like EVM, this Ethereum implementation in Substrate that we spent quite a bit of time working on. Because that was the overwhelming feedback, was that that would be the most attractive or easiest way for developers to engage. And then that's led then to, there's a lot of other tools and other things that developers need to be productive. And so that's continues to be that has been and will continue to be a focus to make sure that all those tools are available and ready to go for teams that want to deploy. And that's that's the feedback. The thing that gives me satisfaction is when we talk to a lot of new teams, sometimes sometimes they've already done a deployment and we're speaking to them for the first time. That is a lot of the feedback that I've gotten is that, hey, we're kind of used to deploying on a chain being kind of a pain in the ass, but we deployed on Moonbeam. Your like developer docs, like we're excellent. Like everything kind of just worked. Like there was we did have a question, but then you were quite responsive in your Discord, and yeah, this is like kind of easy. And so that to me means that it worked, right? Like kind of a lot of the efforts that we've put in to make that environment have worked.
Michael, I'm keen to understand from your perspective, right? You've done a lot of, you've obviously got Arrington Capital yourself, so you're a well-practiced investor in the space. In terms of the Moonbeam Ecosystem Growth Fund, in 2 years or in 5 years' time, how will you know that you're successful, or how do you think you'll measure success primarily in this endeavor?
It's subjective, but I mean, I mentioned before that a lot of times the companies that spring up, we have very little to do with it. We provide capital. I don't want to take any credit. But sometimes just the existence of an ecosystem fund on top of, say, the whole grant program and then whatever the foundation's doing, it's just another layer of incentives for people to feel like there's something real here. And clearly there is something real with Moonbeam, but some people don't know a thing about it. And so, we want to put our name behind it. We want to put our reputation behind it. And then we're hoping that, new companies spring up, at least partially because of our participation. It's no more complicated than that. Ultimately, we have a goal of getting a return on investment because we do have, investors in our fund that are purely there to, see a return on investment. But we think the other goal is to just make the ecosystem better in any way we can. And I don't think those goals are in any way conflicting. If we make the ecosystem better in any way we can, we're going to also make more money. To answer more directly, we just want to see more companies building on Moonbeam. It's a fantastic platform. It is so unique in that it leverages all the good parts of Polkadot, but it's also EVM, and it's just and it was the first one. I mean, other projects are now starting to copy what Moonbeam has done, even within Polkadot. But I just think like the possibilities of new types of apps that can't be created on any other platform is really interesting to us. It's not just the next L1. It is a unique L1 that can allow for things to be built that cannot be built anywhere else. And like I also mentioned the seriousness of the team. We have seen L1s come up with unserious teams, unserious technology, but fantastic memeing. And, people made and lost a lot of money on those things. But ultimately, Derek talks about 5 years from now. And that's what really matters. It matters as well for wealth building, like true wealth building, not just trading and dumping on retail and all the nonsense you see in crypto. It's like, we want to build something and be part of something that's being built that's going to last, decades, if not longer. And you need to look at real technology then. You can't just look at, who has the best memes. Memes are undoubtedly awesome and fun. But it sure would be nice you could pair that with real technology, real and serious technology. That is Moonbeam. It just is, and so that's why we're so excited. Instead of taking our investment in Moonbeam and just selling it, that's why we're so much more excited to hold it and invest it in the companies that are building on Moonbeam as well. It's better from an ecosystem standpoint. It's better from a return on investment standpoint.
From your years of experience in this space, I'm curious to know if there is is there red flags, or conversely, are there telltales when you meet a team that you talk to that kind of indicate that yes, you should, or conversely should not get involved with this team? Are there certain aspects? And you kind of talked about professionalism of the team and the seriousness before, and that's very true of Moonbeam. They're a perfect example of that. But there are other small things that you've learned.
Yes. I mean, look, I'm a guy who invests in people, not ideas. Other people on my team, the team I built out is we try to balance it. So some of the people on my team on the deal side, look only at product, and they're young guys, and I'm trying to build them up. But I care about team, and we've seen, so many investments I have made, even in Web 2 before this, for the decade I was investing after TechCrunch, were teams that pivoted. And, they had an idea, we invested, and that is not the idea that they ended up with. And sometimes those end up having the best return. So the people that matter. And it's not just like we say the people matter, but like we actually go really deep with people, and they don't always know this. After a while they figure it out, but we have psychiatrists like on retainer, and we talk to them regularly about personality types and how personality types work together, and how they can end up being successful people. And so we actually look for certain personality types and try to avoid others. And there's a set of podcasts around this. The company we use for this is called Pathwise, by the way. They don't actually have a lot of online presence, but they're very well known with the a select group of people. Almost every Microsoft executive, for example, goes through their program just because they originally were based in Seattle. So we use them internally just to help like work. It really helps with business relationships. And another way to look at it is weaponized psychology. But like we care deeply about a team psychology, not just the CEO, but the whole team and how they work together. And we're looking for certain personality types. We try to avoid psychopaths, for example, although sometimes psychopaths, do really well, but they're not very fun to work with. Narcissists are super common in startups, and a lot of CEOs are narcissists, and a lot of very successful CEOs are narcissists, but they require certain types of handling that, it's a little bit extra work. You just have to be aware of it going in. Then you look at like people who are more deeply into tech. Some people say people on the spectrum, although it's a little bit offensive, but it's people who sometimes live a rich inner life. Schizoid is a personality type. These types of people are also like fantastic founders, and also really easy if you're loyal to them and honest, like really easy to build deep, lasting relationships with them. And so we think a lot about this stuff, and I don't think any other investors do that I know of. But it is the most important thing. When it came to Moonbeam, it was interesting because I'm looking at it from that standpoint, and I'm looking at this team, and I'm seeing a team that I just really like from that perspective, from like who they are, what they've built before, sort of what their core personality types are. But then other people on the team who are much more tech adept than me looked at the product and like fell in love with it. And so we just, from every part of this deal, we loved it from the beginning. And by the way, same with Algorand, and same with a good percentage of our deals. And it's almost 100% hit rate with those deals. When we love the product and we love the team, it just almost always works out. So yeah, when I say I'm a people like team first person, I deeply mean it. And I spend a lot of time looking at that. As soon as I'm on the first call with a company, and it's almost always Zoom calls now. I mean, in the old days, not that long ago, most of these things were in person, which is even better. But you immediately get a feel. Like within seconds, you're getting a feel for the CEO, and those first impressions are important. And sometimes, like, I know within 5 seconds of getting on a call, or 1 minute of getting on a call, whether we're going to want to aggressively pursue a deal or not. And my gut's generally right. Sometimes it's not. Sometimes I realize like they were very nervous or I was in a bad mood, but like generally my gut reaction is good. And I can't tell founders how important it is. The first minute you're on a call is deeply important with an investor.
Last question, and I'm well over time, and I apologize for that. But one more question I do want to ask is obviously you two both had extremely successful careers before Web3. Michael, you've been around for a long time with TechCrunch and many other ventures. You could have retired a long time ago. I know you're not the kind of guy to do that. And Derek, you've had PureStake before. I don't recall what you did before Web3, but rather, I kind of want to ask, what got you into Web3, but not on that kind of high level picture. I'm sure you've talked about that before. What was like the one moment or experience that you had where you're like, oh, this Web3 thing is quite interesting? Was there a particular time or event or action that you did one day that really kind of opened your mind to it?
I can jump in on this. I mean, I almost want to tie it back a little bit to the comments we were making when we started, when we started the podcast or the spaces here, where if I go back to like when I started my career, like which was a little bit after Michael, but not much, in this first internet wave, there was a certain feeling of like this is going to change everything. Now what? Like, what do I do about it? The problem was that I was like a 22-year-old just graduated from college, and I didn't have much in the way of connections, ability to raise capital, like experience, all the things you would need to put together, kind of a team and make a run at it. And so I kind of saw that and saw all the opportunities that came along with it, but really was just too inexperienced to do much about it. And sometimes I think that's that might be all you get in your life. You might be kind of at the front row seat for something like that, like once, and that's it. And so I do feel that like a lot of those same feelings came back once I got exposed to Web3. And by the way, that's not that obvious, right? You need time, right? So I was also at a point in in my career where I had more time. I had this this previous colleague of mine. Steve, who had also kind of jumped like right into the deep end of crypto, blockchain, Web3. And so, and he, we spent a lot of time together. He was explaining a lot of these concepts to me and a lot of what was happening. And that's when, I had this light bulb moment as I started, reading, and I had the time to really dig into it. And I think then, I kind of realized that, this is I'm getting like a second chance. And, this time around I have, much more kind of experience, like wherewithal, ability to raise capital, experience building teams. And so, yeah, that's, it's quite, it was kind of, the direction was clear. I had to, it was almost like I had to do something. Like, there's no way I would be kind of kicking myself or regretting it, for the rest of my life. I didn't take the opportunity to try to do something.
The right time, the right moment, the right people. What about you, Michael?
Yeah, I get you're not asking an origin story question here. You're trying to ask a slightly different, more interesting question. I did actually retire. I mean, after I sold TechCrunch in 2010, I started a venture fund, but kind of the deal was I wasn't going to be full time on it. Um, and I kind of did sort of half retire. I never fully retired, although I did take 2016 off entirely, which was fantastic. But for the most part, I was just bored. I mean, I filled the time working that I used to work with literally television, and it's not healthy. I mean, some people go out and do fantastic, interesting hobbies, but it wasn't for me. And I was, 40 years old, and so I needed to get back into it. And crypto, at the time I fell in love with crypto was like 2013, 14, when I first did transactions that weren't based on Coinbase, and and that's when I knew I wanted to do crypto. And I started making a lot of crypto investments in my venture fund, which was Crunch Fund at the time. I didn't even occur to me that I could do a crypto only. I mean, I think Pantera at that time was starting to think about or had launched their very first fund, but it never occurred to me to like do only a crypto fund. In 2017, it became quite clear that was possible, and that is when I made the career shift. My partner at Crunch Fund, still a very good friend, had no interest in it. He's like, "No, we're not doing that. I don't want to do that. You go do that." And so we broke up, and that was a big deal. And so that meant I was pretty committed at that point. So yeah, it was just the other thing is like when I was kind of ending the venture stuff, it was like everybody was excited about these scooter startups. I don't know if you guys remember. I mean, it's a long time ago now, but suddenly every VC was investing in the next scooter startup. And I never got that. And, sometimes I don't get things and then it turns out they're really smart. I never got the scooter thing. And it turned out I wasn't dumb on that one. But I just like, what are we doing? Like, it was getting boring in venture. And, the iPhone was such a big platform launch in 2006 that led to so many interesting types of startups. But like scooters were not the interesting thing. And like AI was a thing, but that's a different kind of tech. And I've never, biotech was never my thing. So it was sort of getting boring. Crypto is like a whole new thing that like I knew very little about. And so jumping in meant I had the disadvantage of not knowing anything about it, but also the disadvantage of being older, and it's harder to have an elastic mind and learn quickly. I just think it actually keeps me younger to jump into things that I know nothing about, declare myself an expert, and then have to do all the learning to actually sort of catch up. And I don't think I want to retire. I'm in my early 50s now. Crypto is what I plan to do for the next decade. But maybe something after that is going to be interesting too. I think as soon as you actually retire, and the way I did it, where you just watch TV, is it's the beginning of death. And so I don't want to do that. I'm having the time of my life right now. Way more fun than I ever had as a venture capitalist.
And a lot more fun than you can have with a scooter, really.
So stupid. I'm in Israel right now, and it's like the scooters kind of work in Tel Aviv, but they never worked in the U.S. And anyway, I could go on forever about the scooter startups and how much capital was burnt doing those things. But yeah.
Michael, Derek, thank you very much for making the time of your important days, your busy schedules, to join us on this call. My name is James Bailey, Head of Business Development at SubQuery, and it's been an absolute pleasure having you both on this episode of SubQuery Sessions. Thank you very much.
Are we not going to do questions? Is it just too like iffy?
Yeah, we can open up the table for questions.
I mean, I think we should, because I think there's people. I just think we should. At least I'm willing to. Also, maybe we could take Kelly and turn her into a speaker as well. Kelly's my partner,
I'll do that.
And she was a CMO at Algorand. Everybody likes Kelly a lot more than me.
And I think I have allow someone to speak.
Hey, Mike, how's it going? Ben LaRue here from Exiled Races. Thanks for chatting today. Great to hear you. Had a question for you. Wanted to understand what you're most bullish on in the crypto world, both NFTs and DeFi, and extended outside of that as well.
Is that to me or to Derek or both of us or who?
I'd say it's to the whole group, to be honest. I'd love to hear, but particularly you as well, to be honest.
Okay. I don't know what I'm bullish on. Sometimes we love NFTs and DeFi. We think we love gaming, but I think we've been burned on a couple of games. I don't know if we're good gaming people. Like, we're good with tools, but like, I don't know if I'm good at picking the next game. I like being surprised at what comes next, and which is also why I like when founders reach out with stuff that's way out of left field. I love those startups. In fact, I always want to invest in them, and sometimes my partners have to talk me off the ledge because I'll do crazy stuff if you let me. So I don't know what I'm excited about. I kind of leave it to the market to come to us. We very purposefully do not try to pigeonhole ourselves as a fund. A lot of funds do. They call themselves a DeFi fund because it helps them get DeFi deal flow. We don't like doing that. We actually like everything. So I don't have a good answer for that.
Hello, sir. Can you hear me?
Yeah.
Can I ask my question?
Go ahead.
My question is, partnership is always an important factor for every project. So, who is your partner? What are the benefits you get from those relationships?
So I can take a stab here, and I do have some comments actually on the previous question, which I'll make as well. But there's quite a number of projects already that are deployed into the Moonbeam ecosystem. I mentioned before there's this downtown Moonbeam site that is a third-party site that actually does quite a nice job of having called a curated list, or kind of having a list that has like different categories in it, where you can see all of the different projects that are deployed into the ecosystem. So that's dtmb.xyz. I suggest that could be a good place to go if you're trying to understand the kinds of things that are happening in the Moonbeam ecosystem. That of course doesn't include all of the tools and infrastructure. We mentioned that earlier in the session that are really there to arm the developers to be able to be as effective as they can be when they're deploying different protocols or different software into the ecosystem. So yeah, I think that's probably what I suggest there if you want to understand some of the products that are deploying. Back to, if I could just go back to Ben's question quickly. I want to just take the opportunity, and I know I've spoken about this in a number of other settings, but we have as a team like a large amount of conviction around this idea that we're calling connected contracts, and the idea is that we're at the very beginning of a big shift in how apps are developed, Web3 apps are developed. The mindset is basically changing from kind of a pick one chain and deploy something to that one chain to a mindset of my protocol is going to be on many chains, and how do I kind of construct or build my app so that it's very efficient and it offers like a great user experience, and I'm able to access users and assets wherever they are. And the technology to power that is just like become available like this year. It's not like old, it's like we're just months into this, having this huge new canvas to draw on, and we're starting to see teams now that are picking up the challenge and building apps that are able to kind of using these connected contracts capabilities, using these new cross-chain messaging capabilities to build protocols and apps that span multiple blockchains. And so I see it, I always think about historical analogies where, in the history of compute, you had computers that were useful, that you could put software on, that were, kind of unnetworked in the beginning. And, you still had big communities of people that were sharing those resources, right? And using the systems and even communicating with each other locally, like on those systems. But once they were networked, and once you had the internet, then that changed everything basically, right? Then you had this idea that different computers could specialize in certain things. You could remotely get like access to different services and resources via the network. You have apps that aren't like confined to like one server anymore. They're going to be deployed on like multiple different kinds of computers, both for the user and for kind of powering the back end of things. So I think it's going to take slightly different forms of Web3, but my belief is that the doors are open to that now, and so there's going to be this rapid evolution of how different kinds of specialized blockchains, different ways of stringing those together, or allowing them to work together to achieve like higher kind of higher or whole is greater than the sum of its parts scenarios. And so that's what we're most excited about. I mean, I think just being able to power like that change and to help teams as they're figuring out how they can take advantage of these new technologies. I see that as like extremely fruitful ground for the next, on this kind of 4 or 5 year horizon that Michael was talking about earlier.
Yeah, I definitely agree with that, Derek. And I think it's very clearly kind of been the path of Moonbeam, right? Providing a very similar platform that Ethereum developers can come over, but also benefit from these new technologies in Polkadot. And it's something that we do as well at SubQuery, right? We try to provide the same indexing tools, the same developer tools to developers within Moonbeam, within Polkadot, but also within Cosmos, Avalanche, and now Algorand as well. So it's about bringing all these tools in place. Me personally, I'm a big tool guy. I think, being a developer, when you're in this space, you realize how little developer tools there are. There are quite a lot in some ecosystems, but building new groundbreaking applications in this space is still very hard. It's still very early days, and it kind of feels like the late 90s in the internet boom, where there's a lot of kind of weird stuff happening, but behind the scenes there's a lot of a core development of tools that make the internet really truly easy to use. And you make the analogy before.
James, just to be clear, you were alive in the late 90s. We haven't established that yet. So
oh, Mike, I'm not that young. I wish I was. I do remember dial-up as the soundtrack of my childhood. But blockchain right now is a bunch of islands in the ocean. Each island, there's some bridges across these islands, but they're a bit of a rickety bridge that sometimes breaks, sometimes works. But you're kind of dealing with these own islands, and the next kind of step of evolution, and I think you kind of get into this, Derek, which is how do we make it so that we can move assets, move knowledge, move experiences across all these different islands and take advantage of them all in different ways.
Yeah, absolutely.
Chris, do you have a question?
Yeah. Good morning, everyone. I'm sorry I didn't make the entire spaces, so you might have addressed this already. But over at Reach, we're really actually focused on ecosystem growth in general. But the main question that we have, and this is actually probably for Derek, is that what is the actual North Star KPI for ecosystem growth? Is it number of developers building on your platform? Is it number of unique contracts that are actually launched on the actual platform? Is it number of transactions flowing through those contracts? What does it actually mean to grow the ecosystem? And what is the most important metric?
Yeah, that is a great question. And we have been thinking about this quite a bit. I would say that there's a set of base level L1 KPIs that are kind of undeniable, that are ones that apply to basically any L1. So those are things like active wallets, number of transactions, things of this nature. So those are things where we are tracking those. So we are actually working on a kind of and there are already some of that data is publicly available now, either via some of the explorers we have, like Etherscan, or even this downtown Moonbeam site, I think, is starting to incorporate some of this data. So some of that does exist publicly. I think where it gets more interesting for me is, there's a certain set of KPIs that rule the day right now, particularly when you're talking about, let's say, DeFi use cases, right? So in DeFi, there's this focus on TVL as a metric. If you go to DeFi Llama, for example, everything's sorted by TVL. And I'm actually of the belief that metric may not be, certainly for Moonbeam, that may not be the most important one. And I think in general, the importance of that will probably diminish over time. And the reason is this, that, I think TVL being a key DeFi metric it has contained within it this kind of old way of thinking, right? Where you have, a piece of software or a protocol, it's going to go on one chain, and then, the model is, hey, we need to just get everyone to take assets, bridge them over to where the smart contracts are and deposit them into the smart contract. And so that's kind of the old way of thinking in my mind, is that, we're just going to have this thing and we're going to try to get as many things deposited into it as possible. What I see is in this newer way of thinking, when you kind of have a system that can live on multiple blockchains at once, that uses these cross-chain messages, the need to move assets becomes less. You don't need to move them anymore. Users don't need to bridge in the same way that they do today, like using third-party bridges. And so I think as a result, TVL, at least in the way it's thought about today, would probably become less important over time. And so some of the metrics that I think are going to be important for Moonbeam that we're looking at now are things like messages, right? So if we want Moonbeam to be a messaging hub for this new cross-chain connected world, we need to understand, how many messages are being sent. And there's many different messaging protocols now, right? You have XCM, but you have a number of other messaging protocols that are integrated with Moonbeam. Things like Axelar, Layer 0, and so on. And so to aggregate these messages and understand the messaging activity in aggregate, I think that's a better metric for us to focus on, given the goals we have and what the vision for Moonbeam is. And so I think we're going to be kind of emphasizing new metrics as being key ones, in addition to these base L1 metrics that are kind of at the baseline.
Thank you.
Algerich, do you have a question?
Hi, good morning, everyone. This question is for Michael. What would be your advice to an aspiring Web3 portfolio manager trying to break into the space?
By portfolio manager, you mean investor, or what do you mean exactly?
Yes, sir, investor.
And you already have capital?
Unfortunately not, just my own retail funds.
Yeah, well, capital can also be your own money.
Yes, sir.
It's interesting. First of all, we've gotten large over the years, although we're less large right now after the last 2 quarters. It's actually really hard to write big checks into the deals you want to invest in, and so small checks are appreciated, and so even almost to the point of the smaller the better. So having less capital in a way is an advantage, because you're not forced to skip deals because you can't they can't take millions of dollars from your fund. And one of the things we do is we continue to write small checks because of that, although it has logistical challenges when you have hundreds of investments. I mean, you got to pay attention to your investments and help them when you can. So, I mean, having small amounts of capital isn't a bad thing. What you need to do, though, is brand yourself. And so you need, by the way, I'm happy if you want to DM me to talk to you about this separately, but you need to have what is it you're going to help companies do, and what is your brand, and you have to figure that out, and every fund has to, unless you have billions of dollars, in which case your niche is that you give lots of money. So it means having a Twitter brand. It means figuring out, are you going to help people with connections? Are you going to help people with PR and marketing? Are you going to help them on a technical level, which is probably the most important thing if you're deeply technical, and that's why a lot of people become angel investors who are, as well. But if you have nothing, no edge, no niche, and it means you're probably not going to get access to deals. That doesn't mean you can't invest, of course. You can invest in liquid coins, and sometimes you do better with liquid coins anyway. So, like I said, DM me I'm happy to chat with you more about it.
Okay, awesome. Thank you so much for that answer.
Sure.
From your perspective, Derek, what's your view in terms of what makes a great investor in Web3? Thinking back to those early days in your first round.
I mean, you'd think that this would be some highly sophisticated and nuanced answer, but it's pretty simple. It's just engagement, basically. I mean, there's some, when you're putting a round together, raising funds for a project, obviously every investor you bring on, you think is going to be great, but like half of them, you're like basically like never going to hear from again, like more or less. So, I think that, from my perspective, it's, and some of them, it might be the brand or other things that are helpful, to say, hey, like we have like this big name XYZ, like in our round. So that helps. And maybe that's strategic to just do that, even if, you're not going to be interacting with them much. But, from my perspective, the funds that are willing to, engage and just, sometimes you just need someone to like bounce ideas off of. And, and the thing I would say is like, we're so focused on just building in our ecosystem, a lot of investors have this much more horizontal, cross-cutting, like broad view of what's happening in other ecosystems even. So it's extremely valuable to be able to bounce ideas off of them. They've seen, things tried and fail right before, like, so they can just help with, plans and just being that sounding board. That's the most like, important or most, the most helpful thing to me.
Definitely agree. Like, being a founder is hard, and you've said this before, Michael. There is a huge amount of pain and stress and struggle as a founder, and just having someone out there that doesn't live your day-to-day life and doesn't that's not in the trenches with you to kind of give you the 1,000-foot or 5,000-foot view of the world when you best and most need it is quite invaluable. So finding people that are willing to kind of take the time to talk to you and understand your problem and walk you through some solutions that might have been somewhere else, or just kind of be a sounding board.
It's so funny to hear companies. I mean, it's like, yeah, we just want human beings who will actually talk to us, right? Instead of just like never talk to us again. And it's not hard to be a good investor. It really isn't. It's just don't be a dick. And like Kelly is, again, if she's on this call, like I was so happy to hire her because she adds another dimension of help that we can do. As a founder, you have to be a coder, a product manager, a manager of people. You have to be an HR and a lawyer, and accountant, and a PR specialist, and everything all at once. And you're not going to be good at all of those things. And one of the things we find is like it's really hard with your launch because you don't have on PR side and marketing. You're generally not a marketer if you're good founders are more technical based generally. Kelly, like we hand our companies off to Kelly. She's only been with us a couple of months now, but like, as we do deals, we hand them off and Kelly will help them with every aspect of their launch. And Kelly's also pretty technical and she's been through it with in crypto for years. And we find that to be really helpful. And we're not the first to have done this. I mean, Andreessen Horowitz really started this trend, I think, of services based in Web2 investing. But that's all. Like we also help with tokenomics and everything else. But like, if you're just good at one thing as an investor and you're a human, you can do quite well. It also is full time though. The deals don't fall in your lap. We talk to, we still, even in a down market, we're talking to 25-ish companies a week. And that's, about an average of an hour each. And we'll make maybe half an investment a week. So we're probably doing 1 in 50 or more at this point. So it's a lot of work. You can't just expect the deals to fall in your lap.
So we're coming to the top of the hour. I don't know if we have any more time, guys, but it's been a long time. So I think it's happy to kind of finish here. We covered a lot of topics, and again, really appreciate having you both on this Twitter Spaces, the SubQuery sessions. It was a pleasure talking to you, and this will be recorded, so we'll share it after for anyone that missed it can listen to the recording after. But thanks everyone for joining the SubQuery sessions. And thank you, Michael and Derek, for coming on board and sharing your wisdom.
Thank you for having us. And when you publish the recording, please let us know, and we'll share it on social media. Have Kelly do her thing.
Yeah, awesome spaces, guys. Thanks so much for pulling this together.
All right. Thanks all.